Okay, let's try to. It's tough with the video because you gotta get it. Right? With that, when the podcasting's there, you can just stop and go, right?
Yeah.
Hi there everyone, Colin and Paul here again, and during this course we're going to be teaching you about financial projections. Now Paul had mentioned in the concept video just how important this section would be of your business plan. This is going to be the most scrutinized part of any plan, especially if you're presenting to a bank or an investor. They're going to look at this part first. So Paul, just explain what is going on with the financials, what sort of information and what sort of detail is presented in these financial projections.
Yeah, it's just sort of reiterating what you just said. Yeah, a reader of the plan.
Go number two.
What's that?
Then press record again.
It's a good thing we caught it early.
I know, no bother.
Yeah.
Okay. First time. All right, ready?
Yeah.
Hi there, everybody. Hi there everybody, Colin and Paul here again, and during this video we're going to be teaching you about your financial projections. Now Paul had mentioned in the past video how important this was and really how scrutinized this part of your business plan will be. If you're presenting to a bank, if you're presenting to an investor, no matter really who you're presenting to, they're going to jump to this section of your business plan first. So Paul, just explain to everyone the importance of this again and what sort of detail you're going to have to go through when they're building out their financials.
Yeah, I mean, in your business plan, as Colin just mentioned, this is the section which people are going to look at most closely, because when they read the financial projections, they're going to see how well you understand your business. So the more detail in those financials, the more likely it is that the reader is going to agree with your understanding of your business. And I'm talking about revenues and cost of goods sold and labor costs and expenses and even income.
Okay, so taking revenue, what sort of detail are we talking about? What sort of detail are they going to be wanting to see?
Well, let's use the example of a landscaping company. They want to see, how many customers are you projecting to have in this summer season? If you're projecting to have 14 customers, you're going to be visiting them once a week. You are going to be doing, in some cases, just mowing someone's lawn. In other cases, you're going to be doing some weeding of flower beds, or it could be that you're also doing some fertilizing. That's the kind of detail that the person's looking for in the plan, because that's explaining to them, again, that you understand exactly how your business works.
Okay, and I know you had mentioned about cost of goods sold and labor costs and monthly expenses. If you could just explain briefly the difference between those and what's going to be presented in those parts.
I mean, as far as the cost of goods sold goes, let's say if you're dealing with a restaurant, if you are serving a breakfast, which includes, toast and eggs and bacon and potatoes, well, your cost of goods sold is what it costs you to put those potatoes and toast and eggs on the plate. It may cost you $2 and you're charging $6 for it. So your cost of goods sold in that case is 33%. When we're talking about labor costs, we're talking about what does it cost for you to hire people to either manage your business or to execute whatever it is you are offering your customers, and also paying yourself. So we're talking about not only wages, but we're talking salaries, we're talking benefits. Those costs are huge in most businesses. The last thing when we're talking about expenses, we're talking about, could be that you have to pay rent, it could be that you have to lease a vehicle, it could be that you've got a cell phone, you've got maintenance, you've got insurance, all the other auxiliary expenses that you may face in running your business.
So essentially when you build out your financials that way, showing your revenue and all your expenses, is essentially proving your concept to be able to show you that this is the amount of money this business can actually generate.
Yeah, it's a very good term, the idea that you are proving your concept. And again, the first person you have to prove your concept to is yourself. You have to show that if you're going to go and invest all this money in setting up your business and going out and marketing your business and buying equipment and hiring and training staff, that at the end of the day, it's worthwhile, that there's income at the end of the day, which therefore you can then put in your pocket. Because as an entrepreneur, you aren't going into business to make history, you're going into business to make money. And so the forecast proves that what you thought was a really good idea is actually a viable and sustainable business.
Gotcha. So there you have it, guys. Make sure that you have a fully developed concept and then prove that concept through financial forecasting. Again, this is the most important. And Paul, would you say this is the most difficult as well?
Yeah, it's a showstopper for most people. But with this course, we take you step by step through the process and will give you a financial forecast that is dynamic and one that you can not only use to secure a loan, but also can use in your operation to compare what your forecasting was to what your actual sales were.
There you go. So make sure you take time with this, do it properly. If you have any questions, feel free to reach out and we'd be happy to help you. Seemed okay.
Yeah, okay, good, yeah.
Listen back to it after I pause. I'm gonna listen back to that after I press pause here. Yep.